Welcome to The Business. I'm Elise Morgan. Coming up on the program, not a rout, but a retreat. Sydney and Melbourne driving the fall in national property prices. And a super idea on infrastructure, how industry retirement funds are cutting out the middlemen. Economists were sent into a quandary by the Reserve Bank Board's latest missive today. In the minutes this month, the board omitted its reference to the next interest rate move being up. The line that says members agreed that it was more likely that the next move in the cash rate would be up rather than down, that's been in the last two statements, is now gone. Some economists are viewing this as a sign the RBA is becoming more cautious. It comes as experts are calling the end of the property price boom. Sydney has recorded the first annual fall in 6 years, with Melbourne posting the worst numbers since 2012. And the biggest markets are leading the country down, with national prices on the slide. Auction clearance rates are telling the same story as banks continue to tighten lending standards and a glut of apartments hit the market. Here's Carrington Clark.
It was a perfect day for an auction on the weekend in Sydney's sought-after Inner West, and there had been a lot of interest in the house.
There's a lot of competition here. I heard there's 10 people that registered, so yeah.
But these homeowners know it's a difficult time to be selling.
We're quietly confident.
Bid for the third.
But they didn't need to worry.
Sell it at $1,701,000.
The house going for more than $200,000 above reserve.
All done. Sold your way, sir. Congratulations. Well bought.
But official ABS data shows just how unusual this result is. The numbers show the property price boom is over, with prices falling 0.7% nationally in the first 3 months of the year.
That's probably the difference to a year ago, where perhaps people were, still frenzied regardless of what the property was, where it was.
Blacktown is 37 kilometres northwest of Annandale, but its property market is a world away. This apartment has been on the market for 8 weeks with no offers, and on this Saturday morning open house, no interest.
In real estate, we say you only see serious buyers on rainy days, and we haven't been seeing anybody on the rainy days. So with the warmer weather, we did expect a couple of people through today.
This is just one apartment building in Sydney's west, but agents tell me it's indicative of what's occurring in the broader market. A year ago, there was a frenzy as buyers desperately snapped up property, scared that if they didn't do it then they'd miss out. Now, it's become increasingly difficult to move property for the price that sellers want.
I don't think we've seen anything yet. My expectation is that home prices will continue to slide over the next 12 to 18 months. And, if you're thinking of a quantum, it could be 15 or 20% off the top.
The tightening up on interest-only loans and on improving, lending standards and reducing leverage rates. And that just cools and takes the heat out of the market and naturally pulls prices back down. So, yes, definitely past the peak, I'd say.
But it isn't a consistent story. While Darwin, Perth, Melbourne, Brisbane and Sydney residential property prices fell during the first 3 months of the year, Canberra and Adelaide rose, and Hobart continued to surge.
Those cannot continue the trajectory that they're on at the moment, whilst the major markets are actually going into reverse and as the credit tightening continues.
The ABS data is 3 months old, but more recent numbers aren't promising. Auction clearance rates have now fallen to their lowest level since 2012, with just 53.8% resulting in a sale. That's about 10% lower than a year ago. Despite property prices falling, property construction continues to boom. But the risk is that when apartments like these are finished, it will add to supply and cause prices to fall even further.
There's another 200,000 units due to come on stream over the next 12 to 18 months into a market that's already falling. And my own view is that's just going to add more fuel to the fire.
1,640.
But falling prices aren't bad news for everyone.
Remember, it wasn't that long ago that people were worrying about housing affordability. That was the number one political issue 2 years ago. House prices were rising too quickly, so we shouldn't fret just because house prices aren't rising at the rate they used to. And even if they come down, I think for a period before the next rise, that's okay.
And if the property market gets into serious trouble, it might be up to the RBA to step in.
they've signalled for quite some time that they, Governor Lowe in particular, that he sees 1% as a floor for the cash rate. He doesn't think it's a particularly effective tool for stimulating the economy below that level, which suggests that we've only got perhaps 2 rate cuts in the bag.
The Reserve Bank will be hoping it doesn't come to that.
Carrington Clark there.